man. Ritter, welcome to the Capital Raiser Show. We were just talking a little bit about psychology, your first deal, your background, and I wanted to go into marketing campaigns because we're in a place where we want to automate all of that process and create what we call a capital raiser machine. But so that the audience knows you, why don't you tell us a little bit about your background? I know you've worked on your first syndication and you're looking to scale. So welcome to the show.
Yeah, thanks, Ruben. Appreciate it. It's great to be on the show. Thanks for having me. I'm excited to chat about some multifamily. It's my favorite subject. So, my background was in management consulting, actually. So I spent a number of years doing that. Actually, started a boutique firm focused on like healthcare IT, and so myself and several partners started a firm. Um, and at the end of 2015, we had grown that and decided it was time to exit. So we actually exited at the end of 2015, had some capital coming out of that, and decided, I was really looking around saying, what do I do next? What's the next adventure? And realized that through some education and some mentorship that real estate was the right place to be. And then luckily enough, I was steered pretty quickly into multifamily. So didn't waste a lot of time, got right there, and been focused on it ever since. Really started out as a passive investor, investing in about 10 syndications with other syndicators, really using that to, learn the game, learn how it works, understand what they're doing, why they're doing it. And that was a great education. And then just got to the point where, I felt like it was something I could do on my own. I felt like I'd spent the time educating myself. I've built a network, brokers, lenders, property managers, and felt like it was something that I could take and do on my own, and I could continue to invest and see the benefits, but also, bring others along with me. That's really how I looked at it. Is this is a great opportunity to invest that many people don't know about. I didn't know about it till about 3 years ago, and so I wanted to start to tell more people and just bring people in and realize that together we could buy bigger and better assets than I could on my own. So that's really how it all started. And yeah, like you said, just finished. My first syndication, actually. It's a co-sponsorship with two other groups on a portfolio down in Atlanta, 250 units total. It's two buildings, and we just closed about a month ago. So we're really excited to kick off the business plan.
Man, congratulations, Kent. That's so awesome. I love
Yeah,
hearing
appreciate it.
that stories. So it's phenomenal to have
Yeah.
you on here. But let's dive into some of that. Okay, so yesterday, and I'm not sure when the airing schedule will be, but I had Travis Watts on the show, and he was a 100% passive investor. So I stepped into his mindset, asked him all the questions about how he vets sponsors. I kind of want to do a little bit of that with you, and then dive into the psychology, because you, unlike him, decided to become active. I think he is stepping into some aspects of activity. It's not quite as passive. He's the investor relations person for Ashcroft Capital. But so what was the process for you when you invested passively in about 10 deals? At what point did you decide maybe this is something that I can do actively? What was that like for you?
Sure. Well, it was always something that I wanted to do. I mean, when I first started looking at real estate, I didn't know anything about that you could even passively invest in these deals. So I thought I was originally going to go out and buy like a 50 unit apartment by myself and run it. And that was kind of what the story was going to be. But, through connecting with the right people, basically was asked the question, well, okay, you go out and buy a 50 unit, what do you do from there? I said, well, that's a good point. My capital is going to be blown and I'll be running that property and that'll be, full-time gig. And that'll really be it. Right. So where's the growth? And so that's what led me to syndication in the first place. But I always had in the back of my head, I want to do this. I want to make this a career. It's something I'm very passionate about. And, I didn't want to sit on the sidelines forever. I knew enough to know what I didn't know. And I knew that I probably didn't even know how much I didn't know. So I wanted to start by, dipping my toes in. And that was really the passive investing. But I always had a vision that after I learned the process, I would, want to go after some deals myself. And so it really was just kind of the stepping stone. I always had that vision that I wanted to be active. I wanted to be out there hunting deals. I love the competitive nature of it. I'm an analytical person, so I love the underwriting. I love finding the diamond in the rough, finding the opportunity that others don't see. I think it's a fun process, and it's something where I just see huge opportunity. So I wanted to be a part of it.
Fascinating. So prior to this call or this conversation, I was on the phone with our mentor partner, Mark Smith, author of 17 books or some ridiculous number of books, who's helped a lot of
Mm-hmm.
people scale their business, a lot of big corporations in international settings. But one of the things that he said is that limiting beliefs are rooted in missing rights. So for me, or somebody that's getting started in multifamily or in raising capital, what gives you the right to start a podcast about raising capital or write a book about marketing,
Mm-hmm.
guerrilla marketing? Well, you give yourself that authority. You give yourself the right to do this. This is the stuff that he was talking about. And in order for us to feel like we are able to syndicate multifamily, because a lot of us are just being introduced to it, right? We have to give ourselves permission and start to believe that we can either raise capital or become multifamily syndicators, because a lot of us start out thinking, well, maybe I could do a fourplex, or in your case, maybe you think a little bigger. I can do a
Mm-hmm.
50 unit. But then we step into the psychology and break through the barrier that prevents us, like you did, and say, hey, I can do bigger, better things. You saw an obstacle that said, well, there's an opportunity, or there's not an opportunity to grow if I do it this way. But if I go this other route, I can potentially partner and become a part of something bigger.
Mm-hmm.
So if you like, I'd love to step into some of the psychology. I know you haven't prepared because I don't have any preset questions,
Sure.
but
No, that's fine. Yeah, I mean, so just the idea of, so it probably seems maybe crazy to some people to say, I'm going to go out and buy a 250 unit apartment building,
yeah,
right? I mean, and to me at the beginning, I think it did too. I don't even think it was in my realm of possibility, right? Because it wasn't what I'd ever experienced, right? Everyone I knew that owned real estate owned some single families or maybe some small multis, right? It wasn't even anything that I knew would be possible. And going out and thinking about, okay, maybe I could, even do a 50 unit. I think that was stretching it at the time, but part of it was education. So what I learned was that, when it comes to multifamily, really bigger is better for many reasons. But primarily one is just economies of scale. And the other is professional management. So when you reach, so we look for 100+ unit properties. When you reach that 100 unit threshold, it's really when you start to be able to afford to have dedicated management, for example, dedicated on-site management versus sharing property management with another property, right? So you get dedicated people on site, which I think is huge as far as running the property, especially if you're looking to, find efficiencies. The other is, just scale in purchasing everything, right? And spreading your risk across 100 units instead of one single family, right? If you have one single family and the tenant leaves, well, you're paying the mortgage, right? If you have a 100 unit apartment building and it gets better as they get bigger, right? You're spreading that. So you have that, you could have 80% occupancy and still be able to make your mortgage payment, right? So if we think about it from a recession resistant standpoint, you want to have that cushion in place so that, if things do go bad, you can live to fight another day, because I mean, that's what it's all about. As long as you can pay the mortgage, you can live to fight another day, and you can hold on and you still cash flow the property. So part of it was education, right? And getting the education, getting the right education, what was huge. I was blessed with some really great mentors. Jake and Gino have been great mentors for me. Joe Perlas has been a great mentor for me. And those guys, I mean, that's what they did. They're focusing on bigger properties, right? And you start to ask why, why are you doing it and how do you do it? And through the 10 other deals, that I invested in, I started to see, okay, what are these guys doing? What goes into it? And I said, wow, I've got a background in running a business, a complex business, and consulting for multi-billion dollar health systems and helping them improve their financials and their operations. And, when I put it in that context, I said, wow, this is not rocket science. And like anything else, what I've learned in my life is things always seem more difficult before you get started. And once you get started, you figure it out. And as long as you're putting guardrails in place, the safety nets, my mentors are safety nets, right? They're the ones that make sure, like, I don't have to touch the hot stove because they've touched the hot stove. And if they tell me not to, I'm not going to touch it. So, it's those guardrails around the process that have allowed me to scale up and do that confidently.
That's awesome. So the 10 passive deals that you've done, tell us a little bit about that and what you did to determine who you wanted to invest with. And then we'll go into what your favorite deal and what the worst deal was and how things happened in the worst deal, if at all, if you've experienced a bad deal. Some people haven't.
Yeah, luckily I haven't experienced a horrible deal, but yeah, we can talk about the good and the bad. And the first question you asked was how did I find those syndicators, right? Yeah,
Betting.
so vetting, what I learned is that all syndicators have strengths and weaknesses like anybody else, right? So by spreading out my investments, I was able to learn things from different syndicators. Some were really focused on managing the property and squeezing the turnup, right? Others were focused on really scientific acquisition criteria, right? And really drilling into what are those submarkets that are going to be beneficial because they have all the right drivers. So learning those different aspects, and then just, I think first you've got to get to, I actually just was talking about this on Bigger Pockets, but there's a couple of things that I think you have to look for in a syndicator. First and foremost is character. And that's what I mean by character is that they're motivated to do what's right, um, by kind of an internal cause, if you will, not just because people are watching, right? And so that can be something that's tough to kind of vet out. But I just find you have to get to know people, see how they live their life, see how they run their business, meet some of their employees, how do they talk about them. So you want somebody that has strong character. I think you also want somebody that has a decent track record, and track record doesn't have to mean that they've been doing this for 20 years and they've taken all these deals full cycle, right? There's a lot of folks, including myself, that are in the market now that have only been in a couple of years. But so I think you can look at track record a little more broadly. And, for me, I think my business experience translates very well into what we're doing. It's really looking at how do you improve process, right? How do you manage change? How do you manage people? So I think past business experience can be really beneficial. So looking for things like that. And then, I think another aspect is just making sure that your sponsor, the syndicator, isn't just hungry for deals because they need the acquisition fee to survive, right? Because if people are looking for a deal just to put you in a deal because they're trying to make upfront fees, they're not looking out for your best interest, right? They're not looking out for the deal that's going to return the best returns for their investors. They're looking to do as many deals as possible because they want to get the fees off each deal. So I think you got to be careful about that. You got to understand, what are the means of the syndicator, and are they out, are they paying their mortgage and their current expenses off of the acquisition fees that they're getting? Because I think that can be dangerous.
Yeah, I don't want to get too tangential. I move in a lot of directions on this show.
No, I'll try to follow.
so So in terms of marketing and plan, like the stuff that you're talking about, vetting the syndicator, and then we'll go into marketing plan right after, I promise.
Sure.
But so tell me if this resonates with you. From the sales psychology perspective, what I've heard, which is also an educational psychology, 50% of why you invest is your motivation. 40% is how much you know, like, and trust the person, and 10% of the motivation behind your purchase or investment is actually what the deal parameters are. You know, what are the numbers on the deal, the pro forma, what people expect. Does that sound like it resonates with you?
Yeah, I think it does. I think especially the know, like, and trust is extremely important. I know in my first syndication that the majority of the people that invested with me weren't investing in it because of the deal specifics. They were investing in it because they trusted me, and they trusted that I was putting my money in alongside them, and that I wasn't going to make a bad financial decision, but I also wasn't going to put them in jeopardy. So I think that's so true. I think that that's why relationship building is so important in this business. You've got to understand your investors and their motivations, and they've got to get to know you. You've got to make sure there's alignment there. So yeah, I agree. I think most of the vetting comes down to, um, who the individual is, not as much, what the specifics of the deal are. So I agree. And then you said the other 50% was your own motivation,
Motivation. So why
right?
did you want to passively invest? Was it for the tax benefits, the legacy
Yeah.
freedom? What were your specific reasons?
For me specifically, because I had some capital, but I wasn't at a point where I could just you know put that away and let it work on its own, and go off and retire early. I had a nice little nest egg to start with it to continue to build on. So for me, it was wealth generation, and it was really focused on the appreciation, and being able to just grow that nest egg. That was my initial incentive. Then I learned about all the tax benefits and everything else to go along with it, and I said, "Wow, this is a no brainer, right?" But those are things that initially I didn't even have on my radar. But now that I've been able to see what that can do, for a couple of years now on my own tax returns, I mean, it's pretty amazing, how that sheltering can take place, and you can really keep all that money in your pocket, right? Because like they said, it's not what you earn, it's what you keep, and that really is true.
Speaking on that, are you investing in these deals with cash, with a self-retirement account, with a solo 401k? What have you learned in that regard about additional things to shelter your money from taxes?
Yeah, so I haven't invested with an IRA. I've only personally invested with my own cash. But and from that standpoint, I mean, there's huge benefits, related to just the depreciation from the asset, especially in the initial years, right? With just the way that the tax laws are set up right now. Um, and then, there's benefits on the back end, through things like a 1031, right? A 1031 exchange where you can, as long as you're staying with the syndicator, the 1031 money moves, it kind of moves with the LLC. So as long as you're remaining with the same group, you can continue to roll that over, and you know, you can defer your taxes indefinitely if you wish, as long as you continue to roll over. And I've had investors that have invested with me through their self-directed IRAs. I know that limits some of the tax benefits because it's already tax sheltered, but I think there's still cash flow and appreciation to be had, that it still makes it a great investment. And I think that's something good to look at for a syndicator, is to ask, especially if you're investing with cash, is how are they distributing that depreciation? Because if they're distributing the depreciation to all the investors equally, even the directors that are, or excuse me, even the investors that are investing with their IRAs, um, then you're not getting all the benefits that you could, because you don't need to be distributing the depreciation um, to investors that are already tax sheltered.
Yeah, so have you had any of the syndications that you've invested with return your money completely? And was there something called a Ubud tax, where if the investment that you're in has some kind of financial leverage, like a loan, a Fannie Freddie loan on 80% of it, you have an unrelated business income tax associated to that property. Did you experience that at all? Did you?
So no, I personally haven't yet, because I've been in these deals for about 3 years. Was when about 3 years ago is when I started investing. So we're still, there's only been one deal that I've been in that's done a refinance and returned a large portion of the money. The rest is still out there, still earning the returns. So haven't gone full cycle yet on my own personal deals.
I recommend reaching out to this guy. I've had him on the show, or maybe even watch his show. His name is Damien Lupo, and he talks about
Yeah.
some of. Do you have you heard of him? Seen him around? He likes to work
I've
with
se-
syndicators.
yeah, I've seen him speak. I've seen him speak actually. So
He
yeah.
says that syndicators are like 10xing because if you have a single family investor, they're taking their money and they're applying it and helping the world. But syndication is like you're 10xing or 100xing because now you're creating all these jobs and helping multiple people get into places of rent, and then taking multiple investors and 10xing their money.
Hmm.
So it's his perspective is really cool. Great conversation. I recommend that. But let's kind of walk into you and I are in the same place, right? So we're kind of scaling our businesses and implementing some systems, which I like to talk about on this show, or at least as of lately.
Yeah.
So we are basically in a spot where, as we're growing from 506B to 506C and getting our information out to people, we have to do it effectively with webinars and marketing campaigns and drip email campaigns and educational platforms and podcasts and all these different ways to touch people because they won't ever invest until they've been seen you, 7 or
Yeah.
10 points down the road or over a long period as they're building a relationship with you. What are you going through in that aspect? What are you doing to implement your marketing so that you can scale your business? I know it's harder than most people think, right?
Yeah, I mean, it's a lot of work, right? But it's a lot of upfront work is what I found. I'm going through the process right now and I'm using Active Campaign for automated marketing. And I know there's many products out there, but um, I've heard good feedback from others, so I've started down that path. And building, I'd say, yeah, it's definitely more work than I originally anticipated. I thought it'd be a little more plug and play, but I mean, it's building the campaigns from scratch, building the templates for the emails and the newsletters and the ways that you're going to communicate. Yeah, I mean, it takes a lot of work, but I think it's going to pay dividends in the end. I mean, like you said, that ability to build the relationship with the investors and to create really we're trying to create one to many relationships, right? Where you can only have so many one-on-one conversations, right? And the goal would be to get out and have one-on-one conversations with every investor all the time. But as you expand, there's just too many. So if you can create these one to many relationships through newsletters, through podcasts, where people can engage with you um, without directly speaking with you, right? Podcasts are a great way for people to I think get to know who you are and to begin that at least the know and like portion and maybe even the trust portion of that scenario. And then yeah, you layer on webinars. Something that I've started in my local area is a mastermind group, which is a little more focused. It's not the goal is not directly to attract investors, but it's just a great accountability structure with 8 or so kind of like-minded entrepreneurs, and we get together and we help each other out. We talk about what systems are you using, what accountant are you using, what lawyer are you using, how have you done this, how have you done your marketing, for example, and using that to really help learn from other industries and put those systems in place and try to scale faster. And then, I think meetups are a fantastic way to do that as well. So something I'm working on right now, got the space identified and hoping to kick it off here in December, is start a multifamily meetup in Indianapolis and get local people out and excited about what's going on as well. So, I think as many points of touch as you can have, right, is what's really important. I think consistency is more important than quality. Everything can't be a masterpiece. If everything you put out, you want it to be a masterpiece, and this is something personally I struggle with, you're never going to get any content out. So I've had to learn just to, sometimes good enough is okay, and just get it out there, especially on social media. And, and a lot of times you're your own worst judge, right? So I found people to be very open and really positive about the content I've been putting out. So been lucky there.
So there's this concept. I heard I was on Instagram and I saw Jason, Yarusi, and Pilly come
Mm-hmm.
on and talk about, and I've had many people on the show come on and say, when I ask them, how do you raise capital? They say, well, that's the wrong mindset, bro. Like, what you really need to focus on is providing an opportunity to people. And at first
Hmm.
it was a paradigm shift for me. Now I get it, right? So now
Yep.
it's all about giving the opportunity. But so I see Jason and Pilly on there saying this is exactly the same thing. It's about providing an opportunity and sharing what you're doing. And don't call yourself a money raiser. But there's this balance of, from a business and financial aspect as you're scaling, there's this concept of raising capital and creating machines and creating marketing systems. And it's just like, well, how do you focus on it? Do you focus on the technical aspects of raising the money, or do you focus on the providing an opportunity? And there's a blend, a balance where you got to fall in place. Have you experienced that conceptually?
Yeah, I think the most important thing is that you got to make sure that it's about them, not about you, right? If you're going out and saying, I need to raise money because I need to hit my goals, and and I need to do this, like you're not going to you're not going to be successful, because I agree, you're just approaching it from the wrong mindset. It's actually the exact opposite mindset, right? You should be thinking about it as, what's in it for them, what's in it for the investor. And that's not a manipulative thing. It's very much saying, how can I add value to these people, and how can I, like you said, provide them an opportunity. So I think marketing, I think both, you know both investing and syndicating, but also just the marketing around it, you have to think about it as, how am I going to add value, right? So it starts with creating good content that resonates with people, and that's going to attract people to you. Where you're not going out and running ads and trying to be very salesy. It's really just creating an ecosystem around you, because you're providing great content. Because you're doing that, people want to be near you, and they want to hear you talk, and they want to engage with you, right? And I think that's, when I think about it that way, it just feels so much more natural to me. I'm not a salesy person. I feel really sleazy trying to approach things that way. And so just kind of relaxing a little bit, and taking a softer approach, and saying, hey, how can I add value? And that's also motivating for me, because sometimes especially at the beginning, it was hard for me to even get out there and put myself out there, right? Because you open yourself up to a lot of criticism. But if you take the approach of, I really want to add value to people, I really want to provide this opportunity, if I don't, I'm actually doing them a disservice, then it's a little more of a moral imperative to get out and to spread your message, right? And so that's how I think about it, and that's really helped me stay motivated, as it can be kind of a grind sometimes.
We just tried this new marketing thing where a gentleman on LinkedIn reached out to me. His name's Jeffrey Ziegler. And he's like, if you have a deal that you are currently doing, we have a list of accredited investors. And if we can
Mm-hmm.
write a script about your deal and then reach out to these people that are on a list of accredited people who have agreed to listen to opportunities, tell them about your deal, ask them if they have a certain amount of liquidity, and then if they agree to hear more about it, we'll live transfer them to you. And so I've been receiving these phone calls, and it's like a very wide spectrum of accredited investors. Some people that are,
Mm-hmm.
too old to want to invest at this point. Some
Mm-hmm.
people that say things that kind of blow my mind, like, "Hey, after this investment, can I buy the apartment complex off of you?" And you're like, wow, that's a pretty powerful lead. And there's somebody that when they're receptive to hearing about it, it's because their money is sitting somewhere not being used effectively, and you're solving a
Mm-hmm.
problem for them. But
Yeah.
it's been very interesting to have these conversations, that have been from very negative people that have never invested in multifamily to some very sophisticated apartment complex buyers, and it's been a lot of fun. But let's go into,
Well, I was going to ask you, has it been positive? I mean, has it been worthwhile?
if we get one lead from it, and I don't know, you got to be careful of how you call it. If I can provide one person with an opportunity from this list, it'll easily be worth it.
Mm-hmm.
We just have to find out over time how many of
Interesting.
these people do we actually end up helping, and so, is it, I guess we'll determine that over time.
Sure.
But it's been fun. I like talking about this specific marketing campaign. And let's go backwards, because I met you at Jake and Gino's multifamily mastery live 3 event in
Right.
Orlando, which was such a really awesome event. I did not expect it to be that awesome.
Yeah.
And Jake even asked, or Gino even asked me, he's like, what, did you think it wasn't going to be amazing? And I was like, not to answer him directly. I'm so glad that they invited me out. So, but these guys are people that you have used to help educate you. Is this correct? Tell us about
Yeah.
education and who you used.
Yeah, absolutely. So yeah, Jake and Gino, I mean, both fantastic guys. I found their podcast as I was just getting, I was trying to educate myself as much as I could on real estate. And I started looking at different podcasts. And I think it was probably the first one I found. It was the first one that really resonated with me. And, listening to those guys, they're having so much fun. I said, wow, they simplified things in a way. I said, I think I could really do this. And so I went to their first conference actually, which was 2 years ago, and that was kind of my first toe in the water. And from there, built a relationship with them, signed up for some coaching, and it was really instrumental as I was beginning because they just have a great content platform where they have a ton of online content to go on and educate yourself. They make it really simple, so it's easy to understand. And then they were just really genuine and really wanted to help. So they spent a lot of time on the phone with me, a lot of time walking through some of my initial deals. Back then I was just practicing underwriting, right? So I was just underwriting a ton of deals and bouncing it off of them just to make sure, what was I doing right? What was I doing wrong? Understanding that. So they were really instrumental in kind of expediting my path to get to where I am. Without their education, I just think it would have been much more difficult. They kind of served it up on a silver platter. So it was great. And it was, and they're just good guys to work with. Like, I think part of the great thing about being an entrepreneur is you don't have to work with people that you don't like, right? If you're stuck in an office, you may have people that, may not like the guy in the cube next to you or however, but, I can choose who I want to work with and who I want to talk to. And, just like you, Ruben, people I like, I get to come on and talk to and work with. And I think that's a huge benefit of the career choice.
You also mentioned Joe Fairless. Did you
Mm-hmm.
do any actual training with him, or did you just consider him a mentor because he wrote that amazing book, the best ever apartment syndication book, and you listened to a couple of podcasts from him? He's
No, so I'm in Joe's program. So
okay.
Joe is a mentor for me. We talk on about a weekly basis. Actually, I'm talking with him later today. And yeah, he's been really valuable I would say Jake and Gino were extremely valuable from understanding kind of the core of multifamily investing, how to buy and run a property. I think Joe has been really instrumental from a syndication standpoint of understanding, how to create a syndication, how to set up like all the marketing platform that we just talked about, right? Like he's a master marketer. And so he's been huge in helping me just really grow and scale.
Cool, man. If you talk to him later, let him know that I have him on my radar. I'd love to get him on my show. Maybe he can facilitate that, man. He'd be
I'll,
so huge to get on here, man.
I'll put a bug in his ear. I'll
I
put a bug in
highly
his ear.
admire him. Okay, cool, man. So then let's talk about, okay, so we've covered motivation, education, marketing plans, the 10 deals that you've done. Tell me about where you want to evolve to. How big do you want to grow your business?
Yeah, that's a good question. I don't have a set number. I used to say, okay, I want to have 1,000 units, right? But now my mindset I think has expanded so much. I say, why have an arbitrary number? It's great to have goals, and I absolutely have goals. But as far as how far it can go, I think it really comes down to, um, what's my potential and how hard am I going to work, right? And at this point, I want to work extremely hard, and I want to grow it as large as possible. I don't have to have $1 billion to be happy. That's not on my radar. I'm extremely happy right now, but I'm just enjoying what I'm doing. I enjoy talking with people. I enjoy talking about multifamily and real estate and economics and what's happening. And so I'm kind of in a sweet spot. So I'm going to continue to grow it. Continue to partner in the right way with the right type of people, and just kind of see where it goes at this point. But I'll do it until it's not fun anymore.
Cool. I want to give a shout out to a gentleman named Jens Nielsen. I actually was gonna hire him as my coach, right? And he was gonna hold me accountable to raising capital. And then what happened was when I got on a phone call with him, I told him some of the same things that you just mentioned. I was like, well, 3 months ago I didn't know anything about syndication, and now I do. And 3 months ago I didn't know that I was going to be a podcast, and he was trying to like nail down what are your goals, and I'm like, well, my goals are evolving.
Yeah.
And he couldn't figure out how to lock me down, to like to hold me accountable to something. And ended up not working with him, but I think he's a great, amazing syndicator and coach, so I just wanted to give him a
Yeah.
shout. But yeah.
Yeah. I mean, I would say, in the more near term, I do have like some income milestones, that I'm working toward. But I think I think those things are going to come naturally as I just continue to work, on the rest of the business. So it's not that, I'm shooting toward a specific number. That's the end all be all, but it's kind of, as it naturally grows and progresses. I'd say my nearer term goals, I would like to start my own podcast. So I'm working on that. And, I think there's something to be said. It's great to go to other people's parties, but it's also great to be the host of your own party. So, I think that there's some that I think I could have a lot of fun with that. And then really, getting a lot of the automation set up around this, not just marketing, but investor communication, because right now, I'm doing it on my own, and it's a good problem to have that my investor list is growing. So it's more and more difficult to have, again, those one-on-one touch points. So I need to automate some of these things so that people still feel like they're getting the information that they need, and we don't develop communication gaps.
I'll give you some insight on that. So I'm the type of guy that if I don't take action, then I get stuck in analysis paralysis. So I just
Mm-hmm.
launched my show, but there's some flaws to that, right? So Adam Adams told me, hey, when you launched your show, it's great that you did, by the way, but you're not targeting an audience of passive investors. Is very oriented for people learning about it. And I'm not sure if that's
Sure.
totally true or not. I think there's some passive investors that listen to find out, the people, it's kind of to vet the people that they're investing with to see what they say about raising capital.
Sure.
But Adam Adams said, you need to have a bunch of shows in place and focus on the algorithms and get all of that. Don't come from ready, fire, aim,
Mm-hmm.
come from ready, aim, fire in the sense that have all of your things in place, have a lead capture system on a website, your logo, all of these things, get set up with Libsyn, have a bunch of shows pre-recorded, and then get a lot of people to give you a 5-star rating. So that will accelerate your position on the algorithm that helps you get in front of more people on the podcast.
Right.
So those are some
Yeah.
that you can potentially consider. Maybe even have a conversation with Adam. I'm not sure if you know him or
Yeah.
not, but he's receptive to that type of thing.
That's great advice. And I appreciate that. I mean, I've given a lot of people 5-star reviews lately. So hopefully they'll reciprocate,
Anyone,
when the time comes around.
anybody that's
Hey,
listening.
I got you, man. This is good content. I got you.
All right, cool. And then another thing. So you mentioned something with Joe Fairless that I wanted to dive into, which is the legalities and the structure of syndication, right? So I talk about that sometimes with lawyers and with some people, but what's been your experience of the actual creation? Was that something that they handled? Our company uses Russ Branson out of Los Angeles. Who do you guys use and why? And what has been your experience with the legal side of structuring a syndication?
Yeah. So we've used a local attorney, but I think you got to find somebody that specializes in the SEC, right, and understanding securities law. And then I would say yes, leave it up to the lawyers to do what they do, and to structure the deal. Um, and then you just need to make sure that they understand what your goals are, and they understand who your investors are, and how you're going to be bringing in the capital, right? And I think that's what's really important, because if you want to set up a 506c, but a lot of your investors aren't accredited, that's not gonna work, right? It's not gonna match up. Same thing if you really need to advertise, if you feel you need to advertise to really get the large enough investor pool, and you set it up as a 506B, again, that's not going to work. So I think you just got to educate yourself on the different structures, the pros and cons of them, and then yeah, find a good SEC attorney, talk to other syndicators that have used them, and make sure you're just staying within the lines. I think that's one area where, um, I don't want to blur the lines. I want to kind of follow the letter, and make sure that we're not getting sideways there.
Very cool. All right. So when people want to get a hold of you, what are the best options? You prefer LinkedIn, social media, email? You got a website?
Yeah. So LinkedIn is great. I find that most people find me on LinkedIn. LinkedIn, it's just Kent Ritter, very easy. And otherwise, you can email me at kent@hudsoninvesting.com. Hudson Investing is the name of my company. You can find the website, www.hudsoninvesting.com as well. So there's a few places to get a hold of me. I'm also on Instagram and Facebook. Again, Kent Ritter for both. So really easy to find me.
Right on, man. Well, I'm going to sign off here. I really appreciate your time. Stay on, though. I want to talk to you a little bit further after the show.
Sounds good, man. Sounds good. Yeah, I've really enjoyed it. Thank you for having me on.
It's been phenomenal, man. Thanks for coming on. With that, we'll
Yeah.
sign off, man.